Bitcoin was built to reduce dependence on centralized power. So when one company sells 3,588 Bitcoin and suddenly becomes the market story, I start to pay attention. Not because the sale itself shocks me, but more of what it says about the current state of Bitcoin. This is the Bitcoin Weekly by Blockrise. Here's what's actually happening. Bitcoin is trading around 55,800 euros, or roughly $64,000. It is up about 6% on the week. So that is not a breakout story. The price moved a bit. The structure is what matters more. The main story is not that strategy sold Bitcoin again. The big story is that one treasury decision shapes the entire Bitcoin conversation. Strategy sold 3,588 Bitcoin for around $216 million in order to fund dividends. For years, the treasury company story sounded very clean. Buy Bitcoin, hold Bitcoin, never sell. But now we start to see the real version. And to be honest, I do not think that selling Bitcoin is a problem. I mean, if you need liquidity, you sell assets. That is completely normal. In that sense, I actually see it as a strength. Bitcoin is one of the most liquid assets I have in my own portfolio. So if strategy needed cash and could sell part of its position, fine. That's a feature, not a flaw. But that is only half of the story. The other half is more important. A single entity now has so much Bitcoin and so much influence over the narrative that one financing decision becomes a Bitcoin-wide event. And that should make people think. Because Bitcoin was not created to build a new version of a concentrated power inside of a different wrapper. It was created as an alternative to that. So for me, this is less of a story about selling and more of a story about concentration. And this is also where STRC matters. In very simple terms, STRC is one of Strategy's preferred stock instruments. People buy it because it offers a high cash dividend, 12% to be exact. And that instrument is meant to trade around $100 par value. So when that price starts slipping up to $75, the pressure becomes visible. Because if you promise cash obligations at the top of the instrument, something underneath the structure has to provide the cash. And in this case, that can mean Bitcoin. And this is why it matters. Financial engineering around Bitcoin can end with Bitcoin becoming the liquidity source that holds the entire thing together. So I look at it in two ways at once. First, I do respect what Strategy is doing. There is real financial engineering here. And to be honest, I do like that part. In some way, it even inspired how we think about secured lending at Blockrise. So I'm not anti-strategy, but I also think we should be honest about the trade-off. What Strategy is doing will not stay unique. First a company, then another treasury company, then a nation state, and then another government. This is where it goes. The question is not whether more powerful actors will build on top of Bitcoin. They will. The real question is whether we still remember what Bitcoin was once before this all started happening. Ownership matters. Verification matters. And reducing dependence on centralized power still matters. And that is why I see this sale as a preview, not a disaster, a preview. Two things to watch over the next 2 weeks. First, whether STRC still looks strong if market conditions get rough again. And second, as MiCAR now has officially kicked in, I'll be looking at the unregulated players in the European market. Are they leaving as they are supposed to do? This is not financial advice, it's just my perspective on what's happening based on 10 years of building in this space. Do your own research. See you in 2 weeks. Do not forget to subscribe and remember, verify your Bitcoin.